Definitely. We're just waiting for it to go live, I think.
Yeah, I'm gonna hold on. Let's see. We are live, I think.
We
Yes,
are
we are.
live, I believe.
Yes, we are live. Hello,
Awesome
everybody.
stuff. Hello, everybody. Hi, Orlando. How's it going?
It's going fine, Chloe. Thank you. I am back with a powerful internet connection that won't give
Always
me any issues.
useful. Always useful. That's pretty much the only thing that can let us down as a trader, isn't it? Is the
Yeah,
internet.
it is. It is.
That's all we need.
And you know what? I mean, I have never had a secondary internet connection because it's not like I mean, we need to act on whenever we lose connection. We have our phones, etc. But now that we're going live and doing more stuff, I think to me at least it's necessary.
Definitely. So we were chatting a few seconds ago, and you said that you thought that there was some interesting stuff going on in the markets.
Yes, definitely,
Let's talk about
definitely.
that.
Yeah, okay. Let's talk about that. So let me, I'm going to share my screen. So can you enable my screen sharing abilities,
Oh,
please?
sure. Let me do
Yeah.
that.
And what I was talking about was about the US dollar. Let's have a combo about that because I do believe that there is some opportunities to make some money out of it. All right, can everybody see my screen?
Yeah, I've got it.
All right, so let's go and let's watch the US dollar. So yesterday we had that big rally. Hold on. This is the hourly chart. I'm just going to zoom in and I'm going to be eliminating a few lines out of my chart because I'm only going to focus on this part of the chart, right? And yesterday we had this big rally, right, to the upside. We had the FOMC meeting minutes, and well, there was nothing out of the ordinary, right? I mean, they left the federal funds rate unchanged between 0 and 0.25. They said they were going to start buying a broad and diverse portfolio of corporate bonds to help businesses and the market liquidity, and that the stimulus is critical for the recovery. But what I think impulsed this rally was that the probability of the U.S. economy falling into deflation declined to 0%. That's one of the things that they said, and I do believe that that's what made for this rally on the US dollar. But I mean, personally, I'm still very bearish on the USD. And today, when I started my session, I saw that the USD has come back, had came back. Jesus, I need to work on my past sentence. To that key level, the 93 level. This is the DXY, this is the US dollar index chart, right? And early, yeah, I think it was early in London or mid-London session, we had this spike to the upside, right? I have some shorts going on the US dollar on different currency pairs, and that, I mean, I took water on my trades due to this, but my bias still remained very bearish because it was my belief that we needed for a retest of this structure before going down. And when we close to the downside, when we close below the 93, the 93 level right here, well, I do believe that a bearish continuation on the US dollar could be in play for this session, at least to test the lows at the 92.20, which would give some fuel to some very exciting US dollar short opportunities in some currency pairs. And that's the only thing that I'm looking at for today, actually, the US dollar and how it's going to open in the New York session, right? Because I mean, we don't know if this is going to hold. It looks very choppy at this I mean, if you look the price action, it's extremely choppy, and there's no real direction. And we've seen some bulls coming in from the lows as well as from the highs. So, but if we manage to break with the 92.82, oops, before I lose power on my laptop. Okay, before if we manage to break with this low around the 92.90 level, yeah, definitely at least a short-term bearish move on the US dollar might be in play to test these lows. And this is what I was talking about, Chloe, that excited me for today, at least.
Do you know what? It excites me as well, because pretty much the only trade I think that I'm going to be taking today is short on the dollar yen. So
Already on that one.
yeah. I'm just going to grab the screen and
Yeah, go
show
ahead,
you
go ahead.
what I'm thinking.
Mm-hmm.
So basically, if we go up to the daily time frame here, what I'm trading is the beginnings of a chart pattern, which is a kind of a head and shoulders pattern, really. It's so I'm just looking at this as the left-hand shoulder, the head up here, and then
And
the
that,
right-hand shoulder just here.
uh-huh.
And the fact that I've had this bounce from the monthly pivot, which is a level that I do like to look at a lot, that on the daily time frame is what gives me my bias on dollar yen, as well as everything you've said, obviously, about the US dollar. So my entry was actually on the 4-hourly time frame.
You're already in.
I am already in. So this
Yes.
is this is actually very early for me. With my strategy, I don't tend to get into trades until I'm really convinced that a proper downtrend has started. And this is a little bit early for me in terms of that, but I do love to trade chart patterns. So what I've basically, the trade that I've taken is this bearish price action from the monthly pivot. We've had a pretty indecisive candle here, but then we had a fairly decisive bearish candle there, followed by another bearish candle. So that for me is enough to want me to trade this short. And I'm not necessarily looking for it to trade short for a long time. What I've found with the dollar yen actually lately is it tends to consolidate a lot, and then move a bit, and then consolidate a bit more. So we've seen that over here. We've seen consolidation, then a pretty strong move, another strong move, and then a whole load of consolidation. Then we saw a strong move here, followed by another pretty strong move, consolidation. So I've got a strong move here. I'm waiting for this to be another strong move, but this horizontal level down here, or this area down here, I'm not necessarily being over ambitious past that point, because I feel that could give us another area where we just see some consolidation. So I'm not being overly ambitious. Usually I am pretty ambitious with my trading, but I'm not being overly ambitious. And I'm going to be just taking this trade as it comes, making sure I make the trade safe as soon as I possibly can, and then just trading it down, probably no further than this level here. Probably would even take profit at this previous low, partial profit.
Actually, and what you just said, Chloe, we are in sync, because I got in at around the exact same level that you did. The only difference is that I'm still riding shorts from the first leg down around the 106.80. But the thing is that what you just saw there, I mean, just look at that rejection of the 106, right?
Yeah.
The monthly pivot, the previous a previous area of resistance that was tested twice before we broke to the upside, and the weak dollar and the yen futures rallying. Everything points out at a good short-term short, and I'm saying short-term short because the your blue line is actually are actually my targets. I'm not trying to trade that below that 104.75 level at all. That is a big level of support in the daily, weekly,
Yeah.
etc. And as you said, we have seen a lot of consolidation in the US dollar Japanese yen. Now, I mean, if we get some very bearish moves from the US dollar, the yen is going to appreciate. We're going to see yen futures rally, and yes, it would be probable that that we would break with that low. But I mean, the risk to reward scenario on that specific trade that we both are in right now is fairly good. So I will be pretty happy with that 104.75, even though that, as you pointed out, taking profits at the next low would be also okay, since that was a zone that where we had a lot of buyers jumping in. But again, the thing is that it's plausible that that was due to the big rally of 1% on the DXY on the US dollar yesterday, and that we are going to continue that down move, right? So yeah, I'm pretty happy that we're in sync on that particular trade, and I mean, it looks pretty good. Another thing that I would advise people are listening and watching is to not chase the moves that we're talking about, because you don't know how we manage our trades, our overall strategy, and that could be hurtful if you don't know what the rules uh, or what our rules are to ditch a trade in the middle of it, right? If we see some, I mean, you don't know how we manage our trade. So don't chase these moves. This is for educational purposes only, right?
Oh yeah, absolutely. And I think the whole purpose of this show, Orlando, for me at least, is to do market analysis, and that can be helpful for people no matter what strategy they're trading. But yeah,
Yep.
it's really important not to just see price at this level and copy someone else without actually, knowing what the thought process is behind it, knowing what the strategy is,
Hmm.
and the trade management, because it's very easy to get into trades, but actually the trade management makes all the difference
It
between
makes all the
having
difference, exactly.
a positive trade and a negative trade. And that's you could easily get into this trade and lose money. You could easily get into this trade and make money, but
Yep.
without knowing the difference that is going to happen between now and then, it can be a dangerous thing to do. So yeah, really good point, Orlando.
Yeah, I
Um,
totally agree with you on that one.
and we do of course have, if anyone is interested in learning the exact strategies that we're using, then we are more than happy to share those with you. There are contact details on the YouTube page, and you can just get in touch with us. More than happy to have a chat with you about it.
Exactly. But like you said, Chloe, I mean, we're going to be doing this on a daily basis, and the timing of our show is pretty important to me, because I see it as the calm before the storm, before real volume comes into the market. And that's really exciting. I mean, it is to me, it's very important to sit down 1 hour before the New York Open to really review my levels, and to make up my trade management plans, because I hate to, well, I don't take decisions on the fly. But what I do is that before the New York Open, before New York opens, I go through my charts. I see my levels. I take the anticipated decisions. So when I see the scenarios that are playing out, they're actually not decisions, just automated clicking buttons, because I already made a decision on that possible scenario. So if price breaks with these levels, I will close my trade. If breaks with this level, I'm gonna move my stops there, etc. So it's always good to have a show or to watch a show where you can get some good in-depth technical analysis.
Definitely. It's all about being prepared. A lot of people ask me, what's the best time for trading in terms of the strategy that I trade, or in terms of trend trading, or in terms of trading on the
Hmm.
15-minute time frame, what's the best time to trade? And actually, it's not, my answer isn't necessarily intuitive, because I could say, oh, well, the best time to trade is during the UK session or during the US session, but it's actually not. The best time to trade for me is the preparation stage. Very
Hmm.
often I will have my orders set up
Yes.
before that session starts,
Yeah.
because what I don't want to be doing is making impulsive decisions once the moves have already happened. I want to know what
That's
I'm
the
doing
worst.
beforehand.
Exactly. I agree with you on that one so much. And for example, yesterday we had a big move to the downside on U.S. equities, right? And well, I go to bed afternoon, New York time, right? And yesterday I had to run some errands, but I had already made up my mind, and already had my plan on where to short the S&P 500 if it broke with my level, right? I had my plan, I had my risk mitigated, etc., and I had my sell stop on. So that's I mean that's exactly what you what you're talking about. um Overall, having a plan, it's always good. And yeah, that's something that I have to remind myself every single day. But and that's why it's very to me it's also very important to have a serious routine, every single day, doing this at the exact same time of the day. I mean, just makes for a better trading overall.
Definitely does. It definitely does. And the most important thing for me is avoiding emotional decisions.
Yep.
Anything that you can do to avoid having to make an emotional decision is definitely going to be beneficial to you as a trader, in
Mm-hmm.
building consistency and success as a trader. When I used to, well, when I first started trading, I was very emotional, and I never became consistent until I worked out a way of solving that problem.
Uh-huh. I
I think
agree.
it's one of the biggest problems as a trader, because it's not about ego, it's not about being right or wrong, it's not about getting excited or upset. It's just about doing the same thing consistently over and over
Over and
again,
over. Exactly. That's the only
like you
way
do,
to do
like you do making a cup of tea and drinking it every day, just like that.
it. Or
Or
putting
like
hot
you pour hot
on my
sauce all over
coffee.
you. Oh,
That's
maybe not
right.
that. Maybe not that.
That's right. Um, uh,
Orlando, last time we spoke was a couple of days ago, because
yeah.
you weren't in yesterday, and we were talking about gold. Uh,
Yes, we
how about
were.
you share your thoughts on gold, if that's something that,
Yes. 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 Yes.
because I
I can
know
do that.
everyone loves to trade gold.
Everybody loves to trade gold, and you know that. I mean, that's very, very much true. And it was for me when I first started, but I quickly realized that this is a tough market to trade, mate. But yeah, this is gold futures, right? The current contract. And when I trade commodities, I always look, well, everybody, I mean, not only commodities, currencies too. I always look at the volume profile. If you don't know what the volume profile is, I mean, of course you do, Chloe. I'm talking about people that are watching with the show. Uh, well, the volume profile, what the volume profile does, it's that it plots the entire volume of a period of time, and it gives you in this histogram how much volume was traded per level. And this blue line is called the point of control, which is the highest volume, or the level where the highest volume was traded during this period of time. And as you can see, the point of control tends to be, or high volume zones too, tend to be areas of support and resistance. So gold, talking about gold, I wouldn't be a gold buy. Actually, yeah. I incurred in a small loss trading gold right here at this level, um, buying this level because of I mean, just look at historic price action and look at the I mean, this was a good setup, you know, at a high volume area, uh, a lots of rejections, previous resistance, etc. But of course it broke down. It broke with this level, and now we are trading below that point of control. Right, this level means nothing to me, and right now I wouldn't be a gold buyer. All right, I wouldn't be a gold buyer just because I mean this move was so bearish, and we printed. I mean, fundamentally speaking, I am bullish metals. I'm still holding a silver long, but for the time being, I don't see a bullish scenario in gold. On perhaps if we manage to let me just grab a rate to test to really test this level, the 1920 to 1923 level. That would be very interesting to me, right? So I would wait for another leg down, some kind of a rejection or pattern to form for you to have a good risk to reward entry for a long position. But that's just me, right? At this level, right now, to me, gold is in no man's land. And yes, I would wait for that for the retest of the 1920. On the other hand, silver. Let's have a look. On the other hand, silver is quite exciting at these levels. Um, right here. Let me just delete this line because that doesn't mean anything to me. The difference between gold and silver is it's pretty basic, right? We are at what I like to call a swing level because price has swung around it, but we've also had some rejections after breaking with it, and right now we are retesting that same level where we're seeing some bullish pressure. And unlike gold, I do see a bullish structure. And remember that silver is the strongest between the two metals right now. And if you guys are looking, well, that's my opinion, right? If you guys are looking to get long or involved in long metals, silver is the best play. Now, right now, what I see is just some consolidation inside what seems to be, Chloe, a bullish flag at these levels, right? So the way that I see it is like this, right? We are in a bullish structure, higher high, higher lows. This low right here, to me, is not yet a low because on the immediate structure, we are still making lower lows and lower highs, which means that this low right here would not be a low for me until we break with this high, which would be my entry, right? But I'm not too keen to take that trade just because of the risk to reward ratio in it. It's not very appetizing to the first target. But I'm going to still be riding that. I mean, this silver long until we break with this low. This is where I have my stop losses. And if we break with this, with the 25.80, I'm gonna be out on a profit. But I always will be looking for that long silver just because I mean the potential of silver to the upside is amazing. Just all-time highs at all the way up to 50. I'm not saying that we're going to get there, right? But in gold, we are already in all-time highs. And but the real level that I'm looking at silver is around the 24. If bulls manage to keep control of this market, um, that 24 level is looking like the next target before a big before a big corrective move to the downside. That's the monthly, but if you look at the weekly, um, this is the reason that I took that long, Chloe. Well, I was pretty mad with myself because I had missed this move to the upside on silver, but when I saw that retest on the to the 24 level, that was my trigger to get long, right? So that's why I do believe that it's very plausible that we're going to be hitting those targets to the upside before a move to the 24 level, because to me that retest already happened. But yeah, those are my thoughts on gold and silver. Actually, um, I'm not going to be trading gold anytime soon. Silver looks much appetizing. Uh,
I
as
completely agree with you, Orlando. And you've
Yeah,
just made a really good point, which I like. And I think this is something that all traders should bear in mind. What you said was you were upset about missing that long move on silver, sorry.
yeah,
And I think the really good point made there is just because you didn't catch one of the moves doesn't mean that there's not going to be another opportunity.
yeah, definitely.
So I
That's
think
the way
that's
I see
really
it.
important because people often get upset if they miss a move, or if someone else caught a move and they didn't manage to catch it, or whatever.
Yeah,
And
I
it's
understand.
just not the case that you miss a move and then that's it, that's your trading career over. What is
No.
more likely to end your trading career if you try and jump into a move that's already gone? But if you just wait for
Yes.
the next sensible opportunity, there will always be another opportunity.
Yeah,
Um,
just imagine if I had bought silver at these levels.
right,
Um,
exactly.
I could have wiped my account with this. Well, no, because we are very good at risk management. But if you, it makes no sense to just try to catch the market instead of being patient and just wait for your spots. Because the opportunities to trade, there are always going to be opportunities to trade, right? Yeah, sometimes you're going to miss these big moves, but markets are cyclical. There's always going to be a pullback for you to be able to get in on a move, right? Your only job is to uh, to kick that emotional side of you down, and try not to trade ranging markets or choppy markets, and you'll be just fine.
Absolutely. Yeah. Orlando, I'm just going to take the last couple of minutes. There have been a couple of questions
Yeah,
that
go
we've had
ahead, go
so
ahead.
far. So I'm going to take the last minute. One of them is a question specifically about pound kiwi.
I
So
don't trade that, so go ahead.
the question is, do I consider this to be a good daily wave rider trade long after the close of today? Now, that question is strategy specific, and this show is not strategy specific, because of course we are live on YouTube, freely available to everyone to watch. And for me to share details of the Wave Rider strategy just wouldn't be fair to Actions to Wealth and the people specifically going through the process of learning those strategies. However, what I would say is, as with any trending strategy, it is wise, first of all, to make a note of your horizontal levels of support and resistance. So what you need to know is that there is no major level of horizontal support or resistance, in this case it would be resistance, in the way of your trade making a good reward to risk. Now, there are a couple of levels up there, one of which is not that far away from price. So if I were to enter at the end of today, I wouldn't get a very good reward to risk until that next level. I haven't got things like pivots and moving averages on my chart specifically because all I really want to talk about here is market analysis. The other thing that I would say is, in terms of cyclicity, this move has come from down here. Yes, we do have some small cycles here, and we have had a little pullback, but I would say that getting in at the end of today, after we've already seen this move here, doesn't really make sense to me in terms of trend and cyclicity. I would have preferred it if this pullback had been bigger. I had a clear higher low and then taken a move, because then I would have a better reward to risk between my entry and the next potential level of resistance. Because even if price makes it up to this next level of resistance, it's still not that great a reward to risk. So that is just my humble opinion there, not really specific to the daily wave rider strategy, but just in terms of my chart analysis on pound Kiwi. What I would much prefer to do on pound Kiwi is look to the intraday timeframes and use an intraday timeframe trading strategy to catch the rest of this move to the upside, because that would give a better reward to risk opportunity. So that is my answer to that first question. And then the answer to the next question, which was more of a general question: how do you remove emotions from your trading? And I think, Orlando, you can probably answer this as well as I can. I think there are so many things that you can do. First of all, well, I'm just going to share what I do. How about that? I'm just going to share what I do. I never enter the market live, and I never exit the market live. I always use orders, always trade using orders. If I see a trade and I missed it, and that makes me tempted to enter live, that is chasing the market. That is not trading properly according to my strategy. So I never enter the market live. I always use orders. That means I can make my decisions in an unemotional state, place my orders. If they get triggered, great. If they don't get triggered, no problem. I've already decided where my target is, and whatever happens in between now and then just doesn't matter. I don't even need to look at my charts. Same for the stop loss. Always use a stop loss. Always risk manage correctly. If you're risking 30% of your account on each trade, you're always going to be emotional about that. You'll lose sleep, because imagine if you lose a huge chunk of your account. Of course that's going to hurt. Of course that's going to be an emotional thing. So risk management is essential. So trading with the correct risk, never entering or exiting the market live, always using orders. Those are two of the main things that I do to avoid being emotional about trading. Being properly prepared, doing market analysis at the weekend before the markets are even open, that can help, because you can look out for things without the emotion of the market moving, and without the option of pressing any buttons to trade or anything like that. That can help. There are so many things. I would say those are the main ones for me. What about you, Orlando? How do you keep emotions out of your trading?
Well, the way that I keep emotions out of my trading is, well, pretty much you covered it. I do enter live. I'm going to be honest. A very small part of my trading, I do enter at market, but it's very small, and it's only on occasions, on very specific occasions that I'm not going to go through it. But using stop orders, to me, is what eliminates the emotion out of trading. That's one. Why? Because to me, the way that I see it is this: if I get triggered using stop orders, that means that price broke with my key level or my validation level, which means that my trade idea is valid. I have my stop losses in place. I put my buy stop at, or my sell stop at that level on that market, because I knew that that setup has a high probability of success. With the correct risk management and the correct risk to reward ratios, I am going to make money taking that same trade on a vacuum. Right? That's one. Two, yeah, two is focusing on risk management. Not never trade. I mean, never risking more than, I never risk even 1% of my account ever. So because and this great trader that I know told me this, if you can't sleep, or if you're always looking at your phone because of an open trade, you're trading way too big, mate. And that was true. Three, if you're just starting out, delete the MT4 app from your phone. Please do that immediately. Do not have your MT4 app on your phone, because that is going to create a bad habit on you. That's going to create the habit of always be looking at the market and always be babysitting your trades. And that is not quality trading. Why? Because it's going to create a mindset on where you always are going to have to know where your trades are. And you are never going to be trusting the process. And the way that you trust the process is do your analysis, decide on the risk you're going to be taking based on the probabilities of success of your setups, and then decide to take the trade or not. Put your orders and let it run. Let it run. It will either hit your stop losses, or it will either hit your profits. And yes, at first, sometimes you're going to get big reversals on your positions, and and don't get mad about that. That is just a learning process, and you're going to have, and based on that, you're going to learn how to adjust your targets. Don't maybe not be too greedy. Maybe take 0.5% at a certain levels or a certain percentage. But yeah, I mean, that's the way that I do it. I just don't focus on anything else than my process. And I know it sounds very wishful thinking, but it's not, because I mean, I have done a lot of hard work I mean, the way that I trade in my process. And if I don't trust it, I mean, what I mean,
What's the
it
point?
exactly.
Yeah, you make some really good points, Orlando. I just want to, before we finish, because we have run slightly
Oh
over
yes,
time, and
yes,
we
yes, yes,
have
yes,
the
yes.
US show starting at past. But a couple of things to add to that: have a strategy and stick to it, and trade the same way every single time you trade, and
Yep.
don't ever break or deviate from the rules until you build up your own trust in that strategy. Also, there's no shortcut to back testing. That will build up your
Oh
confidence and lead to being
yes.
unemotional. I mean, I honestly could talk for 2 hours about how to remove emotions from trading, because that
Oh
was
yeah,
my
me
biggest
too.
problem when I started, was emotional trading. So I had
I
to
hear you,
really
Sissy.
get to grips with that. So perhaps this is a conversation to continue over the coming days and weeks. But
Yes, we should.
for now, we have to say goodbye so that we can get ready for Jeff and Ash in the US session show, which is coming up at past. So you've just got about a 7-minute break until Jeff and Ash will be back for the preparation for the US session. Don't miss it. Those guys are awesome.
Yes, they are.
Cheers,
All right,
Orlando. I will
Chloe.
speak to you next week.
I'll speak to you on Monday. Cheers.
Cheers. Bye-bye.
Bye.